Good evening. This is Ken Long from Tortoise Capital. It's September 8th for the time for the evening report. Take a quick look at the market health check. First, we are still in bull quiet mode. We had a return to the potential growth after this pullback into the blue box. We still have strong support at 102, 198. There's some support here from the 20-day moving average at 101 and at the 50-day moving average at 97.5. We still have to get through 104 to resume the bull move. You can see the declining ADX, the black line, has moved from a high of 35 down to about 20, looks like 27, 28.5. Plus DI has improved over minus DI. In the last 4 days, we've gone from oversold conditions in Williams percent R to almost overbought, and that's corresponded with some strong moves in the mechanical overreaction system, which we'll look at in a different movie. Looking at the daily signals, we still have, we are in bull, let's see, we are in bull quiet. We're at 71 on the 10-day index, so we're very close to overbought. The gap stat still favors a reversal of the morning gap in either direction, so whichever way it gaps, tendency is for it to reverse by an order of about 3 to 2. You can see the max pain candidates that are of interest for tomorrow. There's some old reliables, Kraft, Merck, and Pfizer. There are no signals in the overreaction or in the index channeling system. You can see the pivots. The 30-day regression line slope has pulled back all the way back to the average of the last 180 days. Volatility after a brief spike up into normal is below that red line, so we're back into quiet. You can see the ADX and then the histogram of the plus DI minus the minus DI. So some might look at this as a divergence, that the increase in plus DI has not reached previous highs, but we're still only 4 days into this little bounce. And you can see the last 30 days there. In the 551W prototype system, we've got some interesting setups in Merck that we'll take a look at in a different movie. Now, last week, you'll recall that Coca-Cola and Alcoa, and really General Electric too, were all members of the oversold the most in the Dow 30, and they have cycled up to being the most overbought. And so last week's big winners in Merck and Kraft have cycled down to the most oversold conditions. So I like looking at those extremes. The greens are potentials for follow through. If we get a burst through 104 tomorrow, I would expect these to continue to be leaders. But if we see some juice in the market, I would also not be surprised by seeing some of these value plays playing catch up as well. In the tactical report, we can see that Kraft, Pfizer, Merck are among the max pain leaders, and they were the big percent losers today. Bank of America is also a max pain on 10-day and 3-day. Alcoa and General Electric and Procter & Gamble were big winners today on a percent basis, and they closed strongly. You can see they're closing near their 10-day highs. Inside the ETFs, XLE is kind of an anomaly. We see strength down here in oil, coal, and natural gas as big percent winners today, yet we're still seeing XLE, the energy ETF, as a 3-day max pain. So there's a divergence in there that I would be interested in looking at energy companies that have some strength. So if we see a boost in XLE, I would expect those energy company winners to do well. We're going to take a look at one called CMS in another movie later tonight. So that's a quick look at the market. We're close to overbought conditions. That one matters to me, so I think we're fully valued here. We want to make sure we have locked in profits. We're willing to play for momentum plays. We're looking to play for extreme moves from things that are overbought or oversold. But until the market breaks through this 104 level, there's a real concern that we're near the end of this intermediate move rather than the beginning. So, thanks for your attention.